Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Wednesday, the 17th of June. Starting off with a request, plenty of requests today for some reason. Asiamet Resources. Looks as though the first hurdle here was clearly to break the 50-day moving average, but we had a bear trap, a gap reversal, that gap down in March, and I think that sort of flushed all the weak hands out. We've been grinding higher ever since. Rising trend channel that you can draw from the end of March, and at least while we're above, let's say, the 3 pence area, and ideally above the floor of the channel, really around 3.3, 3.4, we should see further developments to the upside. The guess here is that we could hit 7p, which is the top of the upper parallel of that trend channel I've drawn from February, and that would be a 1 to 2 months target, maybe more towards the 2 month end of that timescale, given how relatively slow the shares tend to move here, but at least above the 3 pence area, up to 7 pence on Asiamet. Next up, a stock which took a long time to recover and hit the heights, and also it's one that divides the market quite strongly as well, which is always makes things much more exciting. But Chesterfield Resources here, we had an island gap reversal, March to April, flushing out the weak hands there, and then we had that funny spike as well after that, so that would made the ride even rockier. But it looks as though we're actually going into a golden cross between the 50 and 200-day moving averages, and if that is the case, that could mean that we should be looking towards the higher end of the range as far as targets are concerned, possibly up to 8 or 9 pence, which would be the top of a rising trend channel, or the rising trend channel I'm drawing from April last year. And that target on really, especially while we hold above that April peak at 5 pence. So above 5 pence should take us relatively quickly towards 9 pence. But the upside argument still valid while we hold above the 4 to 5 pence area, which has been resistance prior to the latest breakout this week. Next up, another request, 4D Pharma, which I think I missed out on in the great pharma sweep that I did yesterday. I also missed out on Synergen as well. Here it's interesting in the sense that we had the fader at the 200-day moving average, and the stock hasn't done as well in relative terms in terms of recovery as other pharma or COVID exposed stocks have done. But at least in the near term, we do have something which is positive, which is filling the gap and bouncing at the 40 pence level. Above 40 pence and probably allowing down towards 35 to 33 pence, we are in recovery mode. If you want something more strident as a recovery, an end of week close above that old May low at 42 pence would be the first positive or strong sign there of recovery, apart from obviously the much higher lows that we've had so far for May and June. Initial target while above 40 up to the 50-day moving average at 53, but really looking towards 60 pence while we're above the 40 pence gap floor for 4D Pharma. Next up, a stock which is looking rather more flush with success at the moment, Empyrean Energy. I've seen a few people talk about it on Twitter as well, and quite rightly so. It looks as though we're heading towards the top of a rising trend channel from October, heading towards the 12 to 13 pence level, and that target valid while we hold above post-March, the old post-March resistance at 6 pence. So above 6 pence, looking for 13 pence here, and an inverted head and shoulders break higher, which we've had served up this week, also pushing through the 200-day line at 7 pence as we speak. Next up, a stock which periodically appears here on the Bulletin Board Heroes, comes in the form of IDE Group. Here we've got the situation where the shares have gapped up and broken through that old April peak at 3 pence. What we're looking at here now is not only a break of near-term resistance, but also a break of this resistance line here from July last year, or the summer of last year. Also looks as though we're in a rising trend channel, which could hit as high as 7 pence over the next month or so, especially while we remain above 3 pence. A momentum trigger on this would be a weekly close above the 200-day moving average at 3.5 pence at the moment, and obviously that would be the initial target for the shares. Another request comes in the form of Cadence Minerals from a couple of parties. Here we see that we had that spike higher in April, then a long tail to take up the slack, but remained above the 50-day moving average, which is normally a very positive thing. Same thing for June with a spike and then the tail there. What we'd like to see now is an end-of-day close above the 20-day moving average and 9.5 pence really to hopefully trigger a fresh leg to the upside, which would allow the shares to hit the top of that rising April trend channel at 14 pence. Initially, if you're a fan of the shares, though, there could be a chance above 14 pence to hit up towards 40 pence later in the year, but at least in the near term, let's just go for 14 pence while we hold above at least the 8 pence area on Cadence. Stock which has a bit of chit chat now and again on Twitter is Modern Water, and looking quite solid at the moment. The reason for the excitement in the near term was back in May with the gap through the 200-day moving average. Then at currently at 1.25 pence. What's interesting about that is that we haven't, even on the dip, we haven't filled the gap, which is a great sign of strength. We've also remained above the 50-day moving average at 1.48 pence, and currently we're breaking a line of resistance from the beginning of May around the 1.75 pence area. So above at 1.75 pence, looking for at least a retest of last month's 2.8 pence resistance. Big picture target, possibly rather higher than that, up towards the top of the rising trend channel that I've just drawn now, up to 3.5 pence, as I said, while we hold above 1.75 pence, that broken May resistance line. A new name for the near term comes in the form of Pelatro. Here you can see that the shares have done rather well in the near term with a gap through the 50-day moving average. In fact, two gaps in the last few sessions, so that is clearly a positive. And we've also held that bear trap gap reversal from March, so it does look as though this is a pretty strong situation, catching the bears out. Rising trend channel that I've just drawn from the autumn of last year, floor of the channel at 35 pence, but at least while we're above 40 pence in the last swing low, looking for an eventual target here up towards 90 pence over the next couple of months. A weekly close above the 200-day moving average at 51 pence would provide more ammunition for those looking for such an ambitious target, but it does look as though that will be on its way. Mentioned Synergen, or mentioned the stock that I missed out on yesterday, which is Synergen. Here, end of day close above 40 pence and above the 20-day moving average should be enough to trigger at least an intermediate rally for the shares, breaking that late May resistance line as well. So above 40 pence, perhaps up to the 50 to 52 pence area, which was support before the breakdown that we had at the end of May, and is also the area of the 50-day moving average. Stop loss at the moment for the bulls back below 33 pence, which is the June intraday support area. On to a stock which is less equivocal in terms of any potential buy argument. Scott Gold, very, very strong daily candle today. We've got a golden cross between the 20 and 200-day moving averages as well. And we also had the 50-day line back in April crossing below a rising 200-day line, which tends to be a predictor of a very strong price action to come over the near term. That's coming through now, and at least while we're above 60 pence, which is post-May resistance, looking for a target here over the next month or so, as high as £1.10. So maybe gold stocks like Scott Gold finally coming out into the sunshine. Another request today, a stock which I don't think actually I've even heard of before, I hadn't heard of before, through Vision Group. Again, a similar situation in terms of a break of May resistance, in this case at 22 pence, and a couple of gaps to the upside as well, consecutive gaps as well, very, very strong price action. And that leads us to think that, implies that we'll see a pretty decent move to the upside. Top of an August trend channel from last year, heading towards the 40 pence zone, and at least while we're above 22 pence, 40 pence the target, and confirmation probably coming with a weekly close above the 200-day line at 24 pence plus. Finishing off with a stock which seems to have upset the bears in the near term, and that's Webis. The reason for the technical strength here, I think, is really that strong breakout we had at the end of May through this triangle formation. And then in the near term, over the last week, this golden cross between the 50 and 200-day moving averages, that is a pretty strong signal, especially when accompanied by this V-shaped bull flag that we've got here. Leads me to think that we'll actually do better than the initial target here at 3.5 pence, and actually head rather higher, up towards as much as 6 pence, which is an October resistance line projection, and the top of a trend channel that I've drawn based at the 50 and 200-day moving averages at 1.5 pence. The 6 pence target valid while we hold above the 20-day moving average area, and recent swing low support at 2.5 pence. So above 2.5, looking for 6 pence on Webis. That's it for me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.